Welcome to Mortgage Matters, your go-to podcast for all things home financing. Whether you're a first-time buyer or looking to refinance, we break down the complexities of the mortgage world to help you make informed decisions. Join us as we explore tips, trends, and strategies to turn your home ownership dreams into reality. Let's dive into today's episode. Welcome back. Today, we're looking into the home equity line of credit. Whether you're looking into debt, consolidation, home renovations, emergency funds, or tuition costs, you can count on your home's equity to help you financially cover anything thrown your way. But when it comes down to HELOC, or home equity line of credit, or cash out relief, which would be your best option? Let's look at that today. First, what is a home equity line of credit, or a HELOC? A home equity line of credit, or HELOC, is an additional line of credit secured by the property that gives you a revolving credit line to use for significant expenses or to consolidate higher interest rate debt on other loans, such as credit cards. A HELOC often has a lower interest rate than standard loans, and the interest may be tax deductible. A HELOC is similar to a second mortgage. A cash-out refinance and a home equity line of credit is similar because you can use a HELOC and a cash-out refinance to help you pay for debt, home renovations, large purchases such as an appliance for your home, cars, boats, and any other expenses you may need at the time. But with a HELOC, you won't get the lump. Instead, it works like a credit card, and it can be used and paid back in monthly installments. Another question to ask is, how do I calculate a HELOC payment? To calculate a home equity line of credit, multiply the current HELOC rate by the annual interest rate charged to the loan, then divide the value by 12, which is monthly, to determine how much you will owe each month. This payment will vary depending on how much you qualify for. As you withdraw money from your HELOC, you'll receive monthly statements with minimum payments, including the principal and interest. Another important question to ask is, what are some things I should know before I consider a home equity line of credit? There are 3 things you should know. First, how much equity is in your home. Subtract the amount you still owe on your mortgage from the current market value of your home. You must have at least 15% equity to qualify. Second, what's your credit score? In most cases, HELOC lenders will require that you have at least 620 credit score. HELOC lenders' requirements will vary, but will allow you to borrow up to 85% of the value of your home, which is more than what you would get in a cash-out refinance. Third, what's your current DTI score, debt to income ratio? HELOC lenders require that you have a debt to income ratio of less than 40%. Here are some pros of the home equity line of credit. With HELOC, you'll be able to borrow up to 85% of your equity versus only 80% with a cash-out refinance. The closing costs for a HELOC will be lower than a cash-out refinance. You could qualify for a tax break with HELOC. If you're already locked in a reasonable interest rate, a HELOC will allow you to keep the current rate and still qualify for room to get cash. Here are some cons of the home equity line of credit. HELOC interest rates could be higher than they would be if you refinanced your home. HELOC would come with a much shorter term, say 5 to 10 versus 15 to 30 year fixed mortgage. HELOC is similar to a second mortgage, so you will be required to make 2 separate monthly payments, one for your original mortgage for your property and the other for the HELOC. Payments with a HELOC could vary. Now that you've seen your options, which one should you choose? Now that you've covered the necessary facts, the pros and cons of each option, you should know which option you should prefer and what your current financial situation looks like. Before you take steps to stand firm in choosing cash-out refinance or a home equity line of credit, be sure to factor in potential interest rates, what your monthly payment could look like, tax breaks, and closing costs. Whether you prefer a lump sum or revolving payments, you can meet with someone from your mortgage team and get a clear understanding of your options. we can help you navigate the mortgage process with ease. What about choosing a HELOC for your investment property? When investing in property, the secret to unlocking its potential doesn't lie in bricks and mortar alone. It's also about financial instruments that back your venture. You can transform the equity in your home into opportunity. When you have equity in your home, you're sitting on a potential gold mine that can be tapped into for investment purposes. A HELOC becomes an essential financial tool for investors aiming to maximize their investment property. Because it's different from a traditional loan, this flexible friend allows you to access funds up to a certain limit when you need them. And this flexibility is a boon for property investors. Imagine you have a great investment opportunity, but you need quick funding to make it happen. A HELOC lets you act fast, drawing on the equity to capitalize on the opportunity. The beauty of a HELOC lies in its cost effectiveness. In a world of property investment where every penny counts, a HELOC's relatively lower interest rates can make a significant difference. This is especially relevant if you're exploring investment properties with HELOC as an option. What's particularly appealing is the way interest works with a HELOC. You're only charged for the money you use, not the entire credit line available. Choosing a HELOC could mean more money in your pocket over time, which is particularly beneficial for investors who require funds on an as-needed basis for targeted investments. And this unique feature of HELOCs allows you to keep your costs down while maximizing the potential returns from your investments. Far from being just another way to access funds, a HELOC is a vital strategic asset. It empowers you to make informed and impactful investment choices. With the ready access to funds it provides, you can quickly take advantage of investment opportunities that arise. A HELOC offers the ability to respond to opportunities quickly, whether that means upgrading a property to increase its market value or diversifying your portfolio with new acquisitions. This advantage is crucial when timing is key, like when buying a foreclosed home. With a HELOC, you can move quickly and decisively, ensuring you're always ready to make the most of the opportunities that come your way. It's about leveraging your existing equity smartly to fuel growth and expand your investment horizons. When weighing your options for funding an investment, it's like comparing apples to oranges if you put HELOC against traditional financial methods. Take personal loans and credit cards, for instance. Sure, they might give you quick access to cash, but they often come with high interest rates and not so great terms. They're like sprinters, fast out of the gate, but not ideal for the long run. On the other hand, standard mortgages or loans are more like a marathon. They give you a lump sum upfront, which is great, but they lack the sprinter's agility. Once you're locked into the amount, that's it. There's no more flexibility. And let's be honest, the property investment game is more of a decathlon. You need the versatility to adapt to different events. And that's why HELOC is so great. It's like having a financial Swiss Army knife. It offers the flexibility to adapt to the world of property investment. Using a HELOC for your investment property is like unlocking a new level in a game where you already have a head start. You're not just borrowing money, you're smartly utilizing the asset that you already own, your home. This approach to leveraging your existing equity could be a game changer in amplifying your investment capacity. Think of it this way. You already have a piece of valuable real estate. By opting for an investment property, you're essentially using this asset to springboard into more investments. And this is about increasing the number of properties in your portfolio. It's about strategically using your resources to open up more avenues for growth and potentially higher returns. It's like planting seeds from a fruit you already have. The more you plant, the more you can reap. Choosing a HELOC for your investment property offers investment flexibility, cost effectiveness, and strategic leverage, which is hard to match with other financial options. It's about making your equity work for you in the most efficient way possible. And if you're considering this path, remember, we want to guide you through each step and ensure your journey is as rewarding as a destination. Ready to take the first step towards home ownership? Contact First Nation Financial today to schedule a consultation with one of our experienced professionals. Together, we'll make your dream of owning a home a reality.